Hi, welcome to this SAP FICO training video. Today's date is December the 10th, 2024. And if these SAP FICO training videos are helping you on your SAP FICO training journey, please like, subscribe, um, comment in the chat. Let me know how many years of FICO experience you have. Share if you don't mind. And without further delay, SAP FICO training for margin analysis and the subject of data flow. Okay. Agenda: invoice value flow, overhead cost flow, top-down distribution, production costs flow. In margin analysis, what is data flow all about? How profitability analysis receives its data from the various SAP S/4HANA areas. Focus: invoice value flow. What is an invoice value flow? A process that provides the revenues and cost of goods sold to profitability analysis. What is transferred in invoice value flow? Sales, sales deductions, cost of goods sold to profitability analysis. What is the difference in the value flow in margin analysis and costing-based profitability analysis? Account-based profitability analysis uses GL accounts to transfer values into margin analysis. You need to configure the automatic account determination functionality from sales to financial accounting using the condition technique. Costing-based profitability analysis transfers the values using value fields. You need to assign value fields to sales conditions. Enter T code VF03. This is the sales billing document. Double-click a material line item. Under the Conditions tab is a list of sales conditions. Sales conditions form the values of the billing documents such as the sales price, discounts, taxes, total, etc. Double-click pricing condition PI02 in the condition type field. That brings you to this screen. At the bottom is the account determination section. Account key ERL is used to determine the revenue account to be posted. Account 80002 was determined. Let's configure how to determine general ledger accounts. Open a new GUI. Enter T code VKOA. This transaction assigns general ledger accounts to sales conditions based on certain criteria. Shown here are several condition tables which have various combinations of characteristics. The system tries to find general ledger accounts by going through the tables from the most specific, highest number of characteristics, to the least specific, as defined in the pricing procedure. Double-click 003 Material Group / Account Key. Here, you can assign revenue to general ledger accounts. This is the sophisticated technique referred to in the General Ledger Automatic Account Determination training video. Let's walk through the columns. App. The condition technique specified in this field is used throughout the SAP S/4HANA system. In this column, V is used, which means SAP S/4HANA sales. Condition type. Two condition types exist for account determination. KOFI for billing documents without an account assignment object. KOFK for billing documents with an account assignment object. Chart of accounts. The chart of accounts for which you maintain the account determination. Sales organization. The sales organization that you are maintaining the account determination for. Account assignment group material. A group for the material master that enables different accounts based on the material. Account key. This column contains the account key being used by the by the condition to derive the account. General ledger account. This column contains the general ledger that the revenue is posted to. In our example, this value should be cost element category 11 for revenue or 12 revenue reduction. Accruals account. This column is maintained only if conditions exist that are relevant for accrual. For example, rebate conditions. Make new entries in this or the other condition tables to derive all your relevant revenue accounts. Go back to the billing document so we can review the generated profitability analysis document. Click accounting in the top menu. The system shows the related accounting documents in financial accounting and controlling as shown here. Double-click the controlling document. The controlling object is PSG, which means profitability segment. No value fields exist in the margin analysis and the value is being posted to a cost element. PSG. Let's see how costing-based profitability analysis received its values from SAP S/4HANA sales. We do this by configuring the flow of values from SAP S/4HANA sales conditions to profitability analysis value fields. Menu path to configure the flow of values from SAP S/4HANA sales conditions to profitability analysis value fields. Controlling profitability analysis, flow of actual values, transfer of billing documents, assign value fields. Select maintain assignment of sales and of SD conditions to profitability analysis value fields. Initially, the table is empty. Click New Entries. Assign condition type KF00 freight to standard value field AUSFR, outgoing freight. This assignment ensures that values posted with condition type KF00 will update the AUSFR value field in the profitability analysis. Let's assign quantity fields to your relevant profitability analysis quantity fields. Menu path to assign quantity fields to your relevant profitability analysis quantity fields. Controlling profitability analysis, flows of actual values, transfer of billing documents, assign quantity fields. As with the value fields initially, the table is empty when you start with a new operating concern. Click New Entries. Assign the sales quantity field FKIMG build quantity to profitability analysis quantity field ABSMG sales quantity. Assign all your relevant quantity fields to this table. Click Save. That concludes invoice value flow. Now let's cover overhead cost flow in data flow for margin analysis. Overhead costs flow. How does the flow of overhead costs come to profitability analysis? From other controlling objects such as internal orders, cost centers, or work breakdown structure elements. Controlling cost collecting objects are originally posted with cost. Then what? At month end, the costs are transferred to profitability analysis to provide accurate profitability. What does accurate profitability include? The overhead costs allocated to the proper profitability analysis characteristics. Regarding internal orders and WBS elements, where do the settlement rules come from? The settlement profile. Regarding cost centers, how are the overhead costs transferred? Via the assessment. What kind of postings to profitability segments are possible in financial accounting documents? Direct postings. In margin analysis, what setup does the flow of actual values require? Setting up settlement profiles and assessment cycles in the sender cost object. In costing-based profitability analysis, what setup is needed? Assign value fields to relevant cost elements using a transfer structure. Let's maintain a transfer structure for order settlement. Menu path to define maintain a transfer structure for order settlement. Controlling profitability analysis, value flows of actual values, order and project settlement. Define a PA transfer structure for. This is a list of transfer structures. Select Y1, click copy so we can make a transfer structure specific to our project. Name it Z1, enter a description and press enter to proceed. The system issues a message with the number of dependent objects copied. Select Z1, click assignment lines. As shown here, create as many lines as needed to segregate the various cost elements that need to go to different value fields. Click new entries to create new lines. Create new lines here. Click source on the left. Enter a range of cost elements or a cost element group. Range of cost elements or cost element group. The postings to these cost elements will be allocated to the value field we will configure in the next screen. Enter the relevant cost element range. Choose costs/revenue for internal orders. They're talking about this guy. The other options in the source section are used for production and for service orders that we will cover later. You need to assign the quality/value field. Click value fields on the left. This screen is initially empty. Click new entries, which isn't up there right now. Assign the quality value field that should receive the costs and profitability analysis for the cost elements configured in the previous step. In the fixed/variable flag column, you have three options. Fixed, variable. Okay, talking about this guy. Option 1 is a fixed amount, option 2 is variable amounts, and option 3 is sum of fixed and variable amounts. Enter 3 unless you need to transfer only the fixed or the variable portion of the costs. Maintain the whole structure in a similar fashion. Click Save. Now, let's assign the newly created structure to the relevant order types. Menu path to assign transfer structure to order types. Controlling profitability analysis, flows of actual values, order and project settlement, assign PA transfer structure to settlement profile. You will see a list of settlement orders already defined. Double-click settlement profile YB0020. to see its configuration screen, which is shown here. Enter the overhead settlement transfer structure in the PA transfer structure field. PA transfer structure field. Click Save. Let's maintain another transfer structure for direct postings from financial accounting/materials management. Menu path to maintain another structure for direct postings from financial accounting/materials management. Controlling profitability analysis, flows of actual values, direct posting from FI/MM, maintain PA transfer structure for direct postings. Select transfer structure FI, direct account assignment from materials management. By clicking that checkbox. Click assignment lines on the left. These are the assignment lines already defined. They correspond to the types of costs to be transferred to profitability analysis. Select them line by line and assign them the relevant cost element ranges or groups using source on the left. Here, you can assign a range of cost elements or a cost element group. Now, you need to assign the value/quantity field. Click Value Fields on the left. This screen is initially empty. Click New Entries, which you can't see here. You can assign the value or quantity field that should receive the costs and profitability analysis for the cost elements configured in the previous step. In the Fixed Variable Flag field, you have the following three options: fixed amounts, variable amounts, sum of fixed and variable. Enter 3 unless you need to transfer only a fixed or variable portion of the cost. Maintain the whole structure in this way. Click Save. Let's configure profitability analysis segment as the default cost object for cost elements so it receives costs directly. Menu path to configure profitability analysis segment as the default cost object for cost elements so it receives costs directly. Controlling profitability analysis, flows of actual values, direct postings from FI/MM, automatic account assignment, or enter T code OKB9. Select new entries to enter new cost elements as shown here. Enter a company code in cost element. Put a check mark in the profitability segment column. During postings in financial accounting, the profitability segment will be populated using derivation. You can also maintain the profitability segment manually. That concludes overhead cost flow. Now, let's cover top-down distribution in data flow for margin analysis. Top-down distribution. What is top-down distribution? A periodic function that enables you to distribute aggregated data to a more detailed level based on reference information such as sales revenue. In margin analysis, what level are sales revenues, sales deductions, and cost of goods sold manufactured, COGM, tracked? Customer level, product level, or both? What business transactions cannot be assigned on such a detailed level? Freight, administrative expenses, etc. How do you capture these costs that can't be assigned on a detailed level? The costs are posted at a summarized level, sales organization, or company code. What happens to costs that are captured at a summarized level? They can be allocated using top-down distribution. Before top-down distribution can be used, what needs to occur? You need to define distribution templates. Let's define templates for top-down distribution. Menu paths to define templates for top-down distribution. Controlling profitability analysis, flows of actual values, periodic adjustments, define template for top-down distribution. Here, you see a list of top-down distribution templates already defined. SAP provides templates for distribution by customer, product, or both. You can copy and enhance these templates based on your needs. To review their settings, select the template, click Maintain Processing Instructions. These are the characteristics relevant for distribution. In the characteristic category field, you can define the usage of each characteristic. The four categories are as follows. Distributed indicates the characteristics you want to perform top-down distribution. After top-down distribution, these characteristics will have a specific value, and that's de-distributed. See that guy there? Okay. Retained and relevant to reference indicates that characteristic values in the sender data are kept in the distribution result. Retained but relevant to a reference defines that characteristic values in the sender data are kept in the distribution result, but these characteristics are not used to match sender and reference data. Summarized defines the characteristic values in the sender data and reference data are summarized, so the corresponding line items can be aggregated. That concludes top-down distribution. For our final topic, let's cover production costs flow in data flow for margin analysis. Production costs flow. What companies find production costs important in the calculation of profitability? Companies in the production and process industries. How does the passing of production costs to PA compare for margin analysis and cost-based analysis? Fundamentally different. What is the production cost flow in margin analysis? Goods issue with financial document generated, profitability segment posted with production costs, universal journal contains financial document and PA data. What is the production cost flow in costing based analysis? Goods issue, no posting to profitability analysis. When customer billing invoice is sent to customer, revenue and cost of goods sold are posted, including production costs. Reconciliation problems with financial accounting occur. What is the major improvement in margin analysis in S/4HANA? You can track and analyze production costs transparently using document splitting and price differences while being reconciled with financial accounting. How is cost of goods sold posted during goods issue derived? Using the account determination T code OBYC in GBB/VAX dash. In HANA, the cost of goods sold account can be split into multiple accounts based on what? Cost components of the cost component structure. What currency details can a cost of goods sold split now handle? Multiple currency, valuation based on currency. In the cost of goods sold split document, what currency is the fixed portion of the cost of goods sold updated in? The controlling area currency. Let's define accounts for splitting cost of goods sold. Menu path to define accounts for splitting cost of goods sold. Financial accounting, general ledger accounting, periodic processing, integration, materials management, define accounts for splitting the cost of goods sold. Enter a name for the new splitting profile starting with Y or Z. Enter the controlling area the system will populate the chart of accounts for. You can select the account-based split checkbox, which causes the cost of goods sold to always split when the source amount is posted. Select a splitting profile by clicking the gray space. Click Source Accounts and Valuation on the left. Source Accounts. Okay. Click New Entries, which you can see here. Here you enter the cost of goods sold source accounts. You will need to enter all accounts that are defined in the GBB VAX grouping code in T code OBYC. You can define each account separately, perhaps one for each type of valuation. Legal Group Profit Center. Legal Group Profit Center. Select a source account by clicking the gray space. Click Strategy Sequence on the left. Click New Entries. Enter a strategy sequence. You can define separate sequences for released and upcoming cost estimates. Click Target Accounts on the left. Click New Entries. You can define a target account for each component of the cost component structure. Click Company Code Settings on the left. Click New Entries. You must activate the splitting structure for each company code. Enter a company code. Enter a start date. Select the created splitting structure. Click Save. That concludes production cost flow and this training video. Thank you. If these videos are helping you on your SAP FICO training FICO training journey, please like, share, subscribe, and drop a comment in the chat. Let me know how many years of SAP FICO experience you have. Thank you all for your time, and as always, peace.